It was a crazy week for the markets. The PSEi swinging 2.3%, while the S&P 500 recovering from its worst week to its best week in 2024 on a 5-day win streak. Will the streak continue? Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Outlook. Of course, everybody was saying this. DG Plus became DG Minus as the stock tumbled straight into the support line here at 16 before bouncing back to 1704, falling 27% last week after Friday's Senate hearing on Pogos, where Senator Gatchalian proposed a ban on e-game vendors. Of course, that's not going to happen, right? But at least not all gaming sectors had it bad. Bloom has been steadily recovering from the support bottom last month. This could provide some needed good news for the stock. After Q3 earnings results, it may look like Bloom has hit bottom. And note that Pagcor's share of gross gaming revenue license fees will be further reduced by January of next year. So it may be a good time to take another look at Bloom. Other than that, the PSEi climbed to 7,022 after a wild week, with the index swinging from the 6,920 lows last Friday all the way back to 7,100. It gapped down heavily, and it filled that gap before retesting 7,022 with another gap last Friday. Meanwhile, C stocks led the charge last week, with the Ayala stocks taking a back seat. But look at the rotation to the laggards. We have AEV, we have Monde, we have JGS, even GT Cap making their move last week, helping to push the index past the 7,000 resistance level. Meanwhile, major news from overseas is the anticipated rate cut by the Fed this coming September 18. It will be September 19 at 2 a.m. When that happens. Friday saw a rise in expectations for a jumbo rate cut by the Fed after reports that policymakers were struggling to come to a decision. Investors now place roughly a 45% probability on a 50 basis point rate cut at the Fed's next meeting, compared with 15% at one point last Thursday. Of course, back home, with rate cut probabilities swaying back and forth between 50 and 25 basis points, the peso continues to strengthen and consolidate along the 56.60 to 56 level, even hitting 55.90 from time to time, and actually closed at 55.995 last Friday. If we check the probabilities here, look at these numbers. The market pricing in up to 125 basis point cut at the end of the year. And with these numbers, if we sync that with the BSP meetings, assuming we cut by 25 basis points in the next two meetings, that would put our policy rate at 5.75% versus a potential of 4.25%. Assuming the Fed only cuts 25 basis points in their next two meetings, we can still maintain the 100 basis point spread. Now, if the US cuts more aggressively, will the BSP be as aggressive? So remember, if the BSP becomes more aggressive here, what will happen to our REITs and real estate stocks? We will have a surge in the price action on these sectors. Now, if the BSP will not be as aggressive, we could potentially, the peso appreciate as we break the USD support at 56 here, which is probably why stocks like Pure Gold have been on a rally in anticipation of the peso-dollar exchange improving the margins of SNR, even Keeper Holdings rallying to all-time highs. So let's look at the PSEi charts. The index so far rejecting the 7,100 level twice. And while this looks bearish, if we look at the 1-hour charts, it would tell a different story. Look at the gaps happening in the PSEi, and then the gap fill, a consolidation, a rally. There's actually a gap here. So this could be considered a gap fill and then a consolidation. So what's happening so far is that we are seeing selling pressure encountering bull demand. The move next week, if the PSEi manages to bounce off of 7,022 towards 7,135, will determine if we can eventually punch through this key resistance area, and the next target would be 7,250. Meanwhile, what is going to help the index would be SM. Again, we mentioned that if the index will rally, SM will be the one to lead the way. And what a convincing move by SM, surging back to 940. We have a golden cross here. And MACD crossover signal is bullish. So this could be signs of better days ahead. Watch out for 960 here. But the target price is a nice and even 1,000 pesos. Hold your SM stocks, guys. Meanwhile, AC consolidating at the 610-639 zone. This flag formation here is actually an encouraging sign that AC may break out soon from this resistance. You can ease into AC. GT cap, a nice breakout. We've been watching GT cap ever since 580. Zooming out, we've been saying that this formation here looks like an inverse head and shoulders. If so, our target price could be at around 800. But for now, target price is at 746. Hold on to your GT cap. This resistance here could actually be changed to support 1, and this one could be changed to support 2. Let's see what happens to GT cap if it will retest support in the coming days. Also, we're seeing some laggards trying to catch up. AEV, JGS, LTG holding pretty well at 200 EMA after gapping down after the dividend X date. Ali bumping into the 36 peso resistance. A bit of divergence in the signals here actually. We can now change this also from resistance to support. Support 1. Let's see if it manages to retest support. I would buy more if it hits 32. In contrast, SMPH lagging behind its Ayala counterparts. But a good breakout here and a retest of this resistance here becoming support. Remember, this is the same setup for AC, right? A flag formation. So SMPH finally breaking out of that could be a good chance to accumulate. So as for last week's stock highlights, A-REIT bouncing back from 35.50. Congratulations if you were able to get A-REIT at these levels. At this point, with the jumbo rate cuts, it might not go back to these levels anymore, right? Meanwhile, TEL forming a good pattern here at the 61.8 fib. Let's see how it holds this week. No, of course, let's go to plus with a 14% slide last Friday. You have to wonder about the timing as the stock has had selling pressure since Wednesday, well before the hearing on Friday. Well, you know, like I said, if you think the stock market is rigged, you're right. Our task as dumb money really is to see where the money is flowing and try to ride into that wave. So the question here right now is, was this stock brought down to get some buyers in, or did the big players cash in anticipation of buying it back at very cheap levels, right? At very cheap levels. So let's look at the situation here. Some senators suggested, right, a ban on e-games. I mean, DigiPlus is a cash cow for the BIR. That is not going to happen. The worst thing that will happen is that they institute maybe stricter verification or know your customer, KYC protocols, but that's it. And really, I think this is an overreaction. It will most likely bounce back this week. If you do enter, you can place a stop loss here, somewhere around here, 1572. That would be a potential risk of around 8%, where you can possibly get a reward of 24%. So is it plus or minus this week? We'll see, right? So on to the global markets. The economic highlights last week was the CPI report, rising to its slowest pace since 2021. CPI numbers came in at 2.5% versus 2.9 last month, and an improvement over the 2.6 expectations. On a core basis, which strips out volatile items such as food and gas, the numbers came in at 3.2%. And on a month-on-month basis, though, core CPI rose 0.3%. And while inflation went down to 2.5%, there are certain parts of the economy that are still hot. If you look at the components contributing to inflation, rent and housing inflation is still at an alarmingly high rate, which is why the Fed shouldn't actually be considering a 50 basis point rate cut. Next day, producer price index rose to 0.2% back to June levels, but improved to just 1.7% in August versus 2.1% in the same time last year. U.S. jobless claims ticked up slightly, coming in at 230,000 versus 226,000 expectations. So overall, economic numbers not yet alarming enough for a 50 basis point rate cut so far. And with the ECB, even with a sluggish economic growth forecast at only 0.8%, they only cut rates by 25 basis points. Though admittedly, it was the second time they did so this year. So the concern here is that the ECB has cut rates by 50 basis points. Is the US late that they have to catch up with a 50 basis point rate cut? Trump and Harris debate also went underway last week, with Kamala Harris getting on Trump's nerve. Most analysts peg Harris for the win, and especially after Harris coming out on top after Taylor Swift endorsed her on social media. Is America really ready for a female president? While Barack Obama was a game changer, right? Let's be honest here. Can the US overcome the racial and gender bias and elect a female president? In any case, the markets welcomed the news as the S&P 500 rallied to its best week in 2024, and it actually seemed like a long time ago that the S&P 500 actually had its worst week, right? So after the technical bounce here, Wednesday was pivotal in the market turnaround as the markets digested the inflation reports, pushing the index back into the 5,650 resistance zone. Remember, we mentioned that September is usually a down month for the S&P 500, especially coming into the second half of the month. But with the recent bull run, could this September be different? While we've been using historical performance as reference, we still need to look at what's actually happening and what the price action is telling us. And as we approach this most traded zone here, as expected, the bears were just waiting to push the markets back down, taking the gains as an opportunity to push the S&P 500 potentially even to 5,470 in the next few days. If the market rallies past this most traded zone here back to 5,673, that could set up the market for another run at an all-time high. Now, we will get the Fed rate cut announcement on Thursday 2 a.m. here in the Philippines, and it is going to happen at around the tail end of Wednesday's market day in the US. So what happens after the close of Wednesday's US trading will give us a better sense on how the markets will move in the next few weeks. At this point, the markets have already priced in a chance of a jumbo rate cut. A 25 basis point rate cut may actually push the markets down. More importantly, what could also help move the markets would be the Fed guidance on the economy and what the next round of cuts will look like after the Fed releases the dot plot. As we anticipate Fed rate cuts this Wednesday, how do markets tend to perform afterwards? Looking at the forward returns after the first rate cut, we tend to see the markets falling in the first 5 to 10 days. But depending on how fast or how slow the rate cut will be, if we look at the red lines here indicating the fast cuts, we do tend to lead into difficult times ahead if the Fed cuts by 50 basis points. But again, who knows? It may be different this time, as shown a couple of times before. But generally, a slow 25 basis point rate cut would be ideal. And it's puzzling why the market is actually rallying on the possibility of a 50 basis point rate cut right now, because I mean that would mean that there are bad signs that the economy is weakening worse than initially thought. We've shown this chart before, and let's update this one with the current situation. We are now approaching the easing cycle, and with inflation down to 2.5%, will we get a spike similar to the 1970s? Remember that during that time, the Fed cut rates too aggressively, too early, and this resulted into inflation roaring back. And when the Fed cuts rates, this usually translates into a boost in economic activity, and a boost in economic activity can potentially drive inflation back. So for now, we are about to enter the next phase of the cycle. We are actually climbing a wall of worry, as this could mean a period of uncertainty, because after the rate cuts, nobody knows what will happen. And if you notice, a lot of stock picks are becoming defensive, utilities and stocks, that give high yields. And I guess easing rates mean that high dividend stocks are at their cheapest at the moment. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.